The ASX200 has come up to new highs and we're looking for follow-through in the rally. The US rotation from the Magnificent Seven into more breadth shows promise for those looking for a larger number of participation. Will that rotation occur on the Aussie market with the lofty banks handing the baton over to new leaders? All of this in Gary's top trading shares for this week's report. That gives him a lot to cover. Let us know in the discussion below in the comments which part gives you the most help and is useful to you. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
So you've got a lot to cover. Your introduction in this week's email that you send out on Mondays to your clients had a fair bit on the indices and what's going on, particularly from a technical perspective. We're always looking at that, but even more interest right now because of what's happening. So if we have a look at the NASDAQ, which is the first one in your chart, well, that's broken out to the upside. You said it was possible that it could trawl along to it, but it's actually come out with a fair bit of gusto. What's your take on what's happening in the US now?
Yeah, so I mean, we're basically sort of, I thought we might get a little pause there a couple of weeks ago, but really just, show that, if anything, it's actually sort of winding up here. So almost sort of accelerating higher. So yeah, look, at some stage there, I think we'll get a bit of a pause there. The two riskiest sort of times there are a pullback into August and a pullback into October there. That's probably the, from an election year perspective there, those are the probably 2 months that most likely to get lows, pullbacks occurring into those months there. So, so we have sort of just brushed through that sort of 138 level. Maybe we can go all the way through to the 150 here, but do think we're sort of, getting a little stretched here. So, might want to go sort of short-term higher there before we bit of a cool up there. The more I look at this sort of trend here, Chris, the more it looks like the 60-year cycle there. And that sort of ran up into sort of mid to late July as well. So I don't know where we are in the cycle a bit. So been very similar in nature there and quite different from most of the other election year cycles here. That's probably just something to watch out for there. I think if we hit a bit of a technical zone by the end of this week, just been a little cautious there, but still got momentum there, still showing sort of robust nature there. We saw definitely rotation there out of some of the bigger names during the week there, and then some of the small caps rises. That is the kind of healthy signs there to see rotation through different sectors there. So that's what we want to see in the Aussie market, Care, as well, because some of those sectors are pretty stretched, pretty overvalued, and then there's some other areas of the market there where potentially there's some value coming in. So seeing some rotation into different sectors is a good sign.
Well, one that's more diverse is the S&P 500. So sticking with the US theme and looking at their charts, you've got 161.8% expansion could form some resistance, which looks like it's this little section right here that you've highlighted on the chart.
Yeah.
Is that possible overhead resistance from the fib levels?
Look, it may be meaningful, may not be meaningful, but in the past, they're like the Aussie market has got there's a real knack to basically the 50% expansion and retracement is just something which comes up historically over and over again for the XJO. And the S&P has a history of basically expanding to those 161.8s very regularly as well. So each sort of indice's got its own. It's got its own personality, but it's got its own sort of rhythm that it often sort of goes into. So that is a big level for the S&P, just because that's a level in the past there, which has been often pretty important there. So it's just got to sort of watch that here there. So I mean, you can sort of see within that range on the way down, 61.8 was an important level. But I know historically there, the expansions to that level have been important as well. So some of the quite a few of the bigger tops in the past there have come as 161.8 extensions as well. So just a level I'm always mindful of there. And just like if I see a 50% pullback on our index or a 50% expansion on our index, it's a level I'll be watching really carefully on our index as well. So with definitely a bit of a critical resistance point here. So just be interesting to see how the S&P sort of goes there. Maybe it'll try and brush past it a little bit. Definitely been a pretty strong trend here so far. Hasn't shown too much weakness at all. If anything, it's actually been expanding actually gaining momentum rather than sort of slowing down here. So, it's a friend who's your friend, as they say. But yeah, you definitely got a little bit of timing here, just maybe towards the end of this week, just to watch out for.
So that's the timing on the S&P 500 and looking for the 61.8 fib levels. You mentioned the Aussie, you mentioned that it works more, the idiosyncrasies and behaviour and pattern of it is more like 50% retracement, which the fibs aren't on this chart. But what we can see is this VCP that you were talking about a week or so ago. We've got this confinement and then pop out the top. So you had said coming into this sort of congestion, when we move into the congestion, quite often after a compression like that, it can break out in the direction of the trend that it entered, which is this line on the left. How do you interpret what's happened now with this breakout, new highs, and you're talking about the bank's valuations being rather stretched, especially in the context of historical PEs and consensus forward outlooks for the banks?
Yeah, I mean, look, the odds favour to break to the upside there, just based on a sort of technical pattern. The fact that we've run up into that tightening pattern and then congested there, we normally break in favour of how you moved into that consolidation. And we saw clear signs of buying the dips through that consolidation as well. Anytime I had a bit of a pullback, we saw some really good buying come in there. So yeah, look, there are a few over extended stocks there, and as we know, sometimes these rallies can last a lot longer than anyone thinks there. And to be honest, the CBA trading at 24 times makes no sense at all to me with no growth there. But that stock had some momentum there, bit of a proxy for the Aussie market there. So it's sort of not probably great buying from a long-term returns perspective here. But when a market's obviously racing up, it's definitely got some momentum here. So the thing about when we get a tight coil like this, Chris, we get a breakout, particularly after running up and then boiling there, we normally get a reasonable break as well. So usually sort of by the height of that sort of formation there. So I sort of got, looking for, somewhere around 8,100, possibly 8,200 might be where this gets to. I sort of like to look at probably the first sort of, come within the range there, look at the first sort of apex point, and then maybe sort of project around 80% of that. Just going to be, that's the way I look at it there. So I've sort of got a target there, 81, 8,200, somewhere in that mark there. I think if it gets to 8,150 there, I mean, that's probably a pretty good point to be taking some off the top here. So yeah, it's just oftentimes when you break out like this, there wasn't too many examples in the past then, but they tend to break and move pretty quickly. That's exactly what's happened here so far. So it might get a consolidation day or two in here, but I do expect this to get to 8,100 pretty quickly, Chris. So then potentially might even get to like 8,150, sort of 8,200. But yeah, I don't think it'll go past that sort of level there. They'll probably do it there, and then we'll probably get some sort of consolidation from there. Maybe that's the point where you might see some consolidation in the banks there. But there is some timing for CBA too that up into this sort of weekend there, because pretty much CBA's pretty much gone up here 3 months, sort of from that sort of mid-April up into this high here. So it's a pretty aggressive sort of move here. So when I see an aggressive move like that, sort of run close to 3 months there, that's often a sort of a turning point to watch out for. So just got to watch out for that. So that this index and that banks here might push on here into the end of this week here. But I think if we see them pretty strong towards the end of the week there, and the index is sort of up near sort of 8,100 or above there, that's probably time to sort of take a little bit off the top there.
Right. Well, the question will be, if the banks are rotating over, then where are the new leaders coming from? And we'll get to that later in the report with your trading shares that you've got in there, but you have alluded here there's resources, healthcare and property is something to look at.
Yeah, but we noticed on Europe there where the property sort of shone through last week. We're seeing sort of healthcare jump a couple of weeks ago, even some of the biotech names as well sort of had a bounce there. Obviously resources have sort of had a bit of a pullback here recently, starting to bounce. So we're definitely seeing gold coming again, energy coming again. So definitely seeing some of those resource names starting to show recovery there. So just need those names to sort of do some heavy lifting there if the banks do retreat a little bit.
Well, that would be the rotation. And part of what you were talking about in your report, you mentioned that the Magnificent Seven come off the boil, but there's more breadth in the market. So there have been criticisms for quite some time with a highly concentrated US market. So much, if a dollar's going into, say, an index fund or $100, such a large percentage goes into those Magnificent Seven. If they roll over, what happens? And that's where the breadth argument comes in. You made a point in your report saying that, well, this could favour those who are being critical of such a narrow market being driven by so fewer companies. When you look at the Dow Jones, it's obviously a concentrated group of 30 versus the S&P 500. Do you see some sort of positive movements in that the tech may be rotating over and this could be gaining some ground? Or how do you see what's happening with the Dow Jones, the rotation of the sectors and the breadth?
Yeah, so when we saw with like the Russell and the small caps, so they've had a pretty big move there during the week there. So when the Nasdaq was off 2.5%, saw the Russell up 3.5%. So definitely saw a clear sign of rotation there, sort of, coming out of those sort of bigger cap names that have done all the heavy lifting so far, and then some movement in the small caps, which have been pretty much a laggard for the last 3 years, Chris. The small caps just haven't performed at all. So probably a bit of a shift there, but also maybe tells you that maybe where we are in the cycle as well. So obviously we know that we tend to, the big caps tend to run first, then mid caps, and then small caps will probably last in the cycle as well. So, but it's still a good sign to sort of see other areas of the market, showing some strength, maybe while others sort of cool off this. That's actually sort of a healthy sign, because if it's just that had a lot of market tops, so you sort of get that, you run out of breath there, then the market turns over, and then kind of everything gets sort of hit together. But we do typically tend to see small caps rally last, so that's probably late in the cycle there as well. So just maybe gives you an indication where we are. On the down here, this is pretty interesting because we've had a pretty strong move up into that high here. And now we've sort of started to overlap here, Chris. So sort of got this overlapping nature. So overlapping nature is actually a sideways oriented trend. It's not sitting on top of the previous high, the highs and lows. So basically we've rallied here, mined a new high, then it pulled back near the previous low, and then probably rallied again just to another margin new high there. So that's kind of a corrective sort of sideways orientation. And we sort of saw that too at the end of 21 as well. So not the strongest sort of trend here. So that's just probably a little bit of caution there with the market here at the moment there. So that's just not a bullish. I mean, McLaren used to say, one or two things will happen here is that maybe you'll break out the upside, pull back, sit on top of the previous high, and then you go. Or you basically sort of break down, like we saw here in 22, we break down, come back, retest the previous swing line, and then rolled off. So that's what sort of can happen here as well. So just got to be mindful of that. That's just not the strongest trend there. So I still don't see big corrections this year, but that's still not the strongest sort of looking chart there for the Dow there. So just a bit of caution there at the moment.
Right, well, that's is the last of the indices. We start looking at the trading shares now. When you look in the ASX, obviously the banks are leading with very high multiples. You've talked about different segments and sectors. One of them was healthcare, Clinuvel Pharmaceuticals. Now, 0, 1, 2, 3 and FB, it looks like it's really setting up a base. This is one that you've looked at for a couple of weeks now and showed a lot of volatility right now. So how do you interpret that volatility?
I thought this was looking really constructive there, sort of a bit of a washout into some good timing. Basically sort of two half-year cycles into that low, some good volume down at that low as well, so accumulation there, and a series of sort of high and lows as well. So that's a pretty good setup there. Then we've sort of had a couple of interesting research reports talking, just forecasting sort of revenue, probably to triple by going out to 27 there, with basically sort of what these guys have got in hand at the moment. And if you look under the hood of Clinuvel, it's actually been profitable for about 4 or 5 years. So it's not a sort of an aggressive, having to raise money sort of company there. It has been a fairly well managed group there. It's just probably been obviously COVID there, maybe a little bit of handbrake on there, but has been well managed. But does have a little bit of a call option on their sort of Sinisi and product there, and just what the applications could be for skin, or for potentially what sort of I guess it's got sort of game changer potential there with its this sort of Sinisi, which potentially could end up in all sun creams and pre and post sort of sun care sort of stuff there. So that's a bit of a call option on top here, but I think it's a pretty well managed company, So I think it looks pretty good here. But the research update the other day was pretty positive, and the stock jumped up really aggressively, but then it got absolutely hit really hard. It was actually really weird sort of price behaviour there. And I know there's a lot of shorts out here on this one, Chris. So, and it is a bit of a stock that's not the most easy to trade. Can be, if anyone's ever sort of tried to buy a large parcel list, it can be a little bit hard to sort of get set. Most of the registers fairly sort of not, it's just not really well traded here. So it is a stock which can be pushed around again. So I just felt like a little bit of a odd sort of, trade behaviour there. Maybe sort of shorts trying to beat it down to try and recover their position. I don't know. It's just didn't sort of say, well, man, I thought I looked over the research reports and thought, this looks pretty good here longer term there. So, so I still think this one can really build from here. I think I said the target wise is pretty good. I know Wilson's got like a $31 price target on there on those assumptions there. So most of the other sort of reports are around $22. But yeah, so I do really like this one here. I think it's I just think maybe there's a few little games there played there in the last week or two, but that probably will settle down now and just maybe build slowly. So I've just sort of added my parcel back in after getting sort of stopped out on that pretty sharp pullback. I did expect it to pull back a little bit, just not pull back that much.
Well, that is surprising volatility from Clinuvel, especially with those forecasts from some of the brokers. Obviously,
it's just one of those stocks, Chris. It's not. It is sort of lightly traded. So some of those, you see some of those. I've traded a few lightly traded stocks this year, and you can see the market depths just sort of disappear on days. It's like where the hell all the
where'd everyone go?
Yeah, and then they all sort of already appear. So it's so you can see some weird behaviour in some stocks there. So I just put it down to that. So but yeah, plenty of other things sort of happening in the market as well. So.
Well, one of those other ones with things happening is corporate travel. We were just talking before air about this coming up in some of the companies coming up in some filters and sitting where they are, with particularly this coil formation, this real compression that you've got down here.
Yeah.
So you've highlighted two sections before where coiled and then rallied and coiled and then rallied. What would you be looking for corporate travel? Which boxes would you want it to tick? Hopefully it lead to a rally like we've seen before.
Yeah, it just looked like it's just sort of like I thought kind of exhausted. I've probably gone a bit lower than I thought actually, because I think it's probably trading on about half the multiple that it normally trades on historically. So pretty cheap by sort of fundamental sort of measures there. And so everyone's been a little bit maybe too doom and gloomy about travel market there. And you're seeing definitely a lot of the travel stocks. I've sort of started to recover and started to bounce here in the last month there. So this one here is probably gone sideways there, just pretty tight consolidation there. But that's sort of how a lot of the lows have sort of come in there. They sort of kind of washed out there, consolidated, and then they sort of tend to pop through there. So definitely saw a little bit of increase in volume down at the low here. I think it is sort of pretty undervalued in terms of sort of where it normally sits. So unless there's sort of something negative occurring in the background now, I think good chance of actually bouncing out of this range here. But I've added a little bit of parcel there. But if it breaks out of this sort of $14 range, then I'll add some more there. So I'll just wait for the break to add to that next parcel there. But see in the past there, I think there's been about 3 or 4 of these sort of really tight consolidation like this, and then recover there. So good sign that we're probably doing that at the moment.
Well, that's corporate travel, CTD. Domain holdings, different space. You did talk about property. This one's in a different segment of the property side of things.
Yeah.
But still exposed to the property market in one way or another. Domain holding groups, DHG, you've got the fib levels on here again. So just highlighting for those new to fibs, you're looking at the high here, putting that as 0, and then the low as 100. And then looking at these bounces where we came up to the 50% level and then we've come back down. So would you expect it to be a bit of a magnet and draw down, or are you seeing this consolidation as being a higher low that's possibly going to be able to hold up?
Been watching it for a while there because I thought maybe with that expansion to that 50% range there, kind of went just slightly above the previous high there in 22. So I thought, sometimes when they expand to a marginal new high like that, they can expand all the way back down to the previous low. I thought, well, if this comes back down underneath that low, that'll be a beautiful sort of false break. That's that perfect expansion there. So thought, watching this sort of come down, and it's been strange here because REA has been literally trending up for the whole last 2 years, while Domain has been trending down here. And look, I know REA's got slightly better margins there, but really the businesses are pretty similar, pretty close, not too much, So, you can argue one's maybe slightly better than the other, but they shouldn't be going in opposite directions. But that's the market we're in at the moment. It's definitely a bit of a trading market there. Definitely seeing some sort of odd behaviour there, but we're definitely seeing stuff trend. So, but this looks like it's actually broken out of that little descending wedge there, which has been pretty long serving. Used up a lot of time here. So, and we did see a bit of volume come in there last week too, Chris, as well. So, got a pretty long serving sort of descending wedge there, some volume break out of there. So, that's a pretty good setup there technically. So, I have managed to sort of get set on a 4% holding now around 321. But definitely one that I might look to build on there in a consolidation there, because they're definitely seeing that building sector, seeing property trusts, looking at some of the building sector sort of stocks start to bounce and recover here. So, just some good signs across the board there.
Okay, we're going from one side of the property where we're selling property to building, Fletcher building. You talked about them being across the ditch, having exposure, and being at different parts of the rate cycle, getting a handle on inflation, and the economy sort of turning the corner in a different way that we're not quite there with Australia. So Fletcher building could benefit from that, and it could also have impacts on the cross rates of how the earnings are interpreted. But there seems to be somewhat elevated volume that happened down here. And what do you look for right now on Fletcher in this chart, this weekly chart?
Yeah, so the two things that sort of caught my eye was that the fact, obviously it's striking downtrend, so that's probably not so good. But we have seen this, the foot's been on the throat of the stock basically heading into June 30. So we know our sort of losers for the year, our big losers, that the pressure remains on those stocks until into the tax year. And oftentimes you can see a bit of a bounce or relief rally out of those sort of stocks there. So I thought about that for one thing there, but also we have had a marginal new low here. And the last probably 6 to 8 weeks there was sent elevated volumes, Chris, as well. So, big chunky volume there taking place, the stock here. So thought that looks pretty good there. I just thought this is a real candidate there for the Doms of the Dow sort of recovery there, because it does typically pay a reasonably good yield. And would be on a pretty low PE at the moment, even though the earnings have got a bit of an issue there. But also, the New Zealand economy's been, rates have been a lot higher there. People don't realise that, the New Zealand government has had rates of 5.5% there. So that's really sort of, yes, they've killed inflation there, but they've probably also, kind of killed the economy a little bit as well. So, they're pretty close to actually coming out the other side and starting to cut rates. I think any sort of rate cut there in New Zealand there, which is probably likely soon in there, because I think we've seen it with Canada. You've got the 5.5 come back, and you might get a little bit of a boost there. So just might get a leg up. My potential, this is sort of, I just think this looks a candidate there for a bit of a recovery there. So just technically, I like the signs there. The sector's sort of showing a bit of relative strength there as well. We've got a bit of a false break here. So, I haven't bought this one there just because I'm sort of trying to avoid buying these really big lows. I prefer to sort of buy stocks that are maybe in uptrends or maybe sort of more sideways oriented trends. But I do think this is a candidate for recovery again. So I think it could be one of those stocks that has a pretty good 24, 25.
Well, the dogs of the Dow definitely something that was of great interest and you've done for many years. I'll put a link below for that video because it's really interesting to watch their performances running into the 30 June marker and then bang straight out of it And you've seen some many good trades come from that research. But another one in this week's report is SEK, SEK. False break, question mark. So looking at the low that we had in October 2023 and then the low that we've just seen 30 June, but going further into July, where we've seen recently just underscoring that with some decent volume, much higher volume than last time it was down here in October. Is that false break?
Trade something like this because it's more of a sideways orientated sort of range bound market here. And then it's the same with these sort of more sideways sort of markets. So you definitely get a lot of these false breaks or marginal new lows and then recoveries in there. So two things I like here, apart from the false break that we've got gone to a new low and then recovered, is that the volume's been pretty heavy the last couple of weeks as well. So I've definitely seen that, kind of exhaustive sort of characteristics of sort of a low, and then a not pretty strong buying out of that low as well. So it's had a bit of a pop here actually this week. So probably one to just, probably one I'm going to watch here, maybe look for the first sort of counter move. And as long as we get a counter trend there and we don't sort of see any selling come in, sort of structured sort of high low, there's definitely one to follow, I think. So watching that pretty closely.
Nice. Well, possible false break on SEK, and then Imricor, IMR, putting this medical systems back into the healthcare space.
Yeah.
That's definitely a downtrend into a sideways consolidation, bit of a rally, and a sideways consolidation again. Is this weekly charts, big movement? Is that sort of a big base it could be building?
Yeah, so we've had a few little rallies there where the stock's actually kind of rallied like 100% as well, so like double their value and then consolidate. That's sort of one thing that we sort of noticed in some of those stronger stocks. They'll tend to have like 100% rally, then consolidate and then break out, and then maybe have another 100% rally, consolidate and break out there. So just sort of something definitely watching for now, having done all the research over the past few years on those sort of strongest names there. And we just tend to see some really good volumes when the market does rally and then dries up and then we see the volume come in. So definitely seeing those type of characteristics there, but just love how that long sort of serving, basically almost consolidated for, just under a year, about almost sort of 9 months, that consolidation there. And the whole thing sort of tightened up here and just starting to break out there. So been a bit of volume there, which is pretty good. Pretty interesting company as well, Imricor. So definitely got the sort of potential to have a bit of a game changer in the cardiovascular area. And yeah, it's got some other applications as well. So I know Equity Mates did a interview with the CEO there in September there. So I listened to that interview. I'm just really impressed by the CEO and the company, what it does and what they're looking to do. But this is one that could really be a bit of a game changer for the industry, how things are done. And it's got it's sort of around that sort of heart flutter cardiovascular surgery. At the moment, basically, if you like the cardiologists basically have to X-ray the patients, and then they're sort of almost going in blind. Whereas this is like a hands-free sort of MRI sort of scan. So basically, it's a scan from the patient point of view and also from the doctor point of view, doesn't expose them to the radiation of an X-ray. So it's a lot safer there, and also gives them heaps more visibility with the operation there rather than going in sort of half blind as well. So it's got some real potential there. Like if it sort of gets a wider approval, could really take off there. Just noticed the last month there's been a few contract wins come through. Chris, there's been about 3 sort of contract wins in different parts of Europe. So they do have their CMR, so and sort of they've already got their commercial. Basically, they can basically start earning some money here. So oftentimes with these biotechs, it's the point where they start to make some money, get some commercial sales. That can be a real pivotal moment for those companies. So as long as they don't have to keep going to market and raise money there, and I think Imricor has had to raise money in the past, but they raised money a while back here. Like they've got still plenty of cash at the moment and starting to get a few sales there. So it just could be a bit of a pivotal point. So definitely one to keep an eye on there. I actually have added a small position there just because I think it's got some real potential. But yeah, it's just, definitely not without its risk there, being in that sort of biotech space. Things can go wrong there. And me personally, if I do sort of take any position in these ones, it's always sort of the smaller side there. But I just like what I'm seeing here with the stock here. I think it's got real sort of that sort of game changer potential there.
Well, game changer potential, that's something that you noted looking back in your Magnificent Seven and the leading companies on the ASX that you reviewed just a couple of weeks ago. So when you look at the Aussie market here, you've got these leaders and these potential ones, the ones to add to your watch list. Just quick take on your thoughts on the rotation of sectors in the Aussie. I know you talked about possibly the financials could fall off. You've highlighted healthcare, you've highlighted property, and you've highlighted resources as being potential candidates. When you're working through your trading and your lists, are you preferring to find something that's sort of already got a decent trend to it and more volatile and higher beta like a resources company, or something with a higher value and higher yield and earnings potential? How do you weigh up those when you're looking at your...
Oh, yeah, I mean, obviously in the past, obviously looking at those sort of kind of value shares with a, lower PEs and sort of high yields. So that's definitely what the market's been attracted to in the past there for the high inflationary periods there. But obviously as that, if we do, you're starting to see most of the other markets are sort of starting to get inflation under control. So therefore, you're definitely seeing more people towards growth. And obviously that tech has been a pretty strong area in the States as well there. So definitely seeing sector by sector here, but yeah, just trying to be alert to, kind of where there is some value there from a fundamental point of view, and also just make sure the price action is supportive of that as well. But yeah, just mindful of the, just know when a market does this sort of core like we've done in Breakout, you can get a bit of a, can get a sharp rally into there, but then you can go through a bit of a long consolidation after that as well. So, so the market will have that sort of bigger move and then have a long period of consolidation there. So kind of expecting that, Chris, to be honest. I think market, I think can rally a bit higher here and then go through a bit of a long period of consolidation as well. So what that means hopefully is that maybe 2 out of every 3 stocks might consolidate, maybe only 1 out of 3 might be heading up there. So it'll make things a little more difficult, but we still have to identify those sort of sectors that are still robust and still firm and starting to, move higher as well. So there definitely will be that case there. So that's what I'm expecting to sort of set up here, once the market goes a little bit further.
Well, obviously those expectations come off a lot of research and a lot of experience. And we'll put a video here on the right-hand side of your review of the Magnificent Seven. And we say thank you, Gary Glover from Novus Capital.
Thanks, Chris.